Hey folks, Dan Frio here with your opening bell for September 12th, 2025. So next week, we're going to have the Federal Reserve coming to the table in 5 days. What are they going to do? Well, that's what we're going to talk about in today's video because the economic news for the day is pretty mute because we have a lot of information to cover this week. So I'm going to recast that briefly for you because I'll have a 1 o'clock live event for you guys to ask me questions. But I'm going to go over briefly what happened this week and the whys behind these changing for you guys folks today. So let's get over to it. My name is Dan Frio. I come to you each day to explain to you guys what's going on with these and the whys behind it. Well, today's kind of a nice day. We don't have anything slated on the economic agenda. So what we had so far this week was producer inflation, we had consumer inflation, and we got a jobs report. And that helped the markets push down rates a little bit. But the big news right now is what the Federal Reserve's going to do at the next meeting because they're meeting in 5 days. So let's fast forward over to some of the news that we're seeing to see is there anything coming between now and next Wednesday when the Federal Reserve announces. So let's get over to it. Let's go to the markets right through here. The Dow Jones, that's slipping a little bit, but the S&P and the NASDAQ are basically flat as a pancake there. We got oil up $1. I don't like that. It's a $63 a barrel. And we had bond yields increasing a little bit. Go over to cryptocurrencies. They're still on a tear, about 115,000 through there. But let's get over to the MBS market and see where they're faring. This is, if you're following my channel on a daily basis, this is basically the nuts and bolts behind it all. My whole goal is to help explain to you guys what is going on with interest rates and how do you find the best rate out there. So what I want to talk about briefly is this chart right through here, how this works and how you figure out where mortgage rates are going. Okay, so what a lot of people focus in on is the 10-year Treasury. And they're like, okay, if the 10-year Treasury is going up, well, mortgage rates are going up. If the 10-year Treasury is going down, well, mortgage rates are going down. But that's old school. If you really want to know what's going on with mortgage rates, you have to check out the MBS, the mortgage-backed security, basically the mortgage bond that trades on Wall Street. Here it is. The confusing part about all this is, if you're new to my channel, is how do you figure out, is this good news or bad news if the price of the bond is going up or down? Well, it's pretty simple. Here's what we're seeing so far today. Well, it's up just a tad. This looks massive, but this is up 1 click. So all you need to do is understand the bond market. So here's kind of how it works. I do this every couple weeks to explain to you guys how bonds work. It doesn't matter if it's a mortgage bond or just a bond in general. If the price increases, yields decrease. And if prices decrease, rates increase. So let's get over to it. So right through here, you're going to see this says $100 or 101.11. It's not $100, but let's just assume that the maturity, when you buy this bond, when you turn it in, it's worth $100. Okay, that's our set point. So the bond value when it comes to maturity is $100. Okay, so now let's do this. Let's pay a low amount so you can understand how when we increase the price, the yield or the rate goes down. Okay, so let's say, for example, I give you $50, okay? And the bond's worth $100. So I give you $50 and I buy the bond or invest in the bond. And then a year or two, whenever it comes to maturity, that bond, I hand it back to you and I get my face value of $100 back. Okay, so what was my yield? Let's start with it. We gave you $50 and we got $100 back. So we basically doubled our money. So we had 100% return. Okay, so now let's go down and see, if the market goes down, like through here, that means rates are going up. Let's explain that. So let's say I increase the price. So the price goes up. I'm going to show you how yields drop. So let's go and I pay you $100 for this bond. Okay, and when it comes to maturity, I get $100 back because that's the maturity price of my bond. So what's my yield? 0%. So do you see when I have a lower price, I have, a higher yield, and as the price goes up, the yields come down. So we love when this market is going up, up, up and away. This looks pretty massive, but this is only 1 point. You need at least 12 to 15 points up here to even move the pendulum. So a lot of days when you see that or you see this, just because this moved just a tad, doesn't mean your rate actually moved when you're calling your bank or your broker. Here, let me explain this as well to you. Rates usually trade in eighths. So meaning this would be 6.25, not 6.27 or whatever that is. This wouldn't be 5.6. This would be 5.625. This would be sometimes lenders will give you 5.99. It's basically the same as 6. This is 5.75. So hope you understand how these work. They go in eighths increments. So this has to change at least an eighth for your mortgage rate to change. So just a little piece of tidbits right through there for you. So let's get over to the equity markets and see how they're faring for the day. Let's get to, that's not the Dow Jones. I wish that was the Dow Jones. Let's get over to the pre-markets to see where they're faring for the day. I don't think the markets are really moving all that much. Good news, the Charlie Kirk, it looks like the assassin was captured. Thank God. The people are crazy. And I'm not even going there because that really pisses me off and how a lot of people are treating this. So I don't care your views on politics or anything else, but folks, you have to have feelings for people. And that's all I'm going to say in that part. So in the equity markets we have right now is we have the Dow Jones down 100, but basically the other markets are flat. We got the S&P down 3, the NASDAQ 23. We got oil up that I don't like because oil's inflationary. Let me explain why. When oil prices go up, that means the prices of the pump are going up. Well, how does all of our stuff transport around? It's trucks and tractors and all this other stuff. That's how all this stuff ships. Basically, that's how a lot of products are produced is with oil. So when oil prices go up, it increases inflation on almost everything. So we like when oil is at $65 or below. That's basically uninflationary. Once you get to 70, 80, 90, that's when it starts really impacting the inflation numbers that we got like this week. We got producer and consumer inflations. Producer inflation was just a hair higher than expected, but the producer inflation was virtually nil. And again, we're going to cover this in our closing bell for the day today. So basically the equity markets across the board are pretty darn good. Let's see what crypto's doing. It's back up to 115, not bad there. And we got the oil market. So let's get over to the bond market now. And I did explain this to you, but let's see if there's anything in breaking news on here today that we can focus in on. Nope. Treasury yields rise as investors weigh inflation and jobs. So that's what we're getting so far today. And you see on the economic calendar, really nothing through there as well. So let's get over to, this is what the Federal Reserve focuses in on the Fed. They got inflation, which on most cases came in kind of, let's say, tame. We had the producer inflation flat. And we had consumer inflation, just one of those numbers, 0.1 higher than expected. So nothing really there. The unemployment rate, that's staying steady at 4.3. These numbers probably will be changing because earlier in the week we saw that there was 990,000 jobs kind of just disappear. So I'm assuming the unemployment rate might tick up a little bit, but unemployment still is, well, the Federal Reserve was created for two mandates. One was to keep prices in check, aka inflation, and the other one was keeping the jobs market at full employment. Well, 5% is full employment, so anything other than that is good. So an unemployment rate of 4.3, I'm going to give that a thumbs up. And then the GDP, we're at a positive number, but we're a really positive number there at 3.3. That means the economy's kicking pretty good. So without all the smoke and mirrors that you get from mainstream media and everything else, the markets aren't looking too bad today. So the biggest concern that I have is, yes, all this data that the Federal Reserve monitors, and this is what they monitor. But the biggest pendulum that I have right now is the tariffs. And I keep dwelling on this every day. And you're going to hear more and more mainstream media talking about that. Because if the tariffs are deemed illegal, the whole big, beautiful plan and the whole budget and everything is just thrown out the window because that is a huge, I'll say that's one of the biggest parts of the big, beautiful bill is these tariffs because they're really starting to bring down our deficit. Don't believe me? We'll talk about that today on the closing bell as well. So my name is Dan Frio, folks. I'm not expecting rates really to move at all today. There's no economic news that should really move the pendulum. The Federal Reserve's meeting next week. We got the bond market right through here, the one you really need to pay attention to. It is completely flat. And we have the Dow Jones and the equity markets kind of really not doing anything as well today. And you know what, folks? I'm pretty good with that because the market volatility is probably one of the hardest things that we have to manage here in the office. So without further ado, let me tell you who I am and what I do. So I do these videos each day to inform you guys what's going on with these things and the whys behind it. But you have to understand what I do and why I do this. So I'm actually a federally licensed mortgage loan officer. What that means is I'm licensed in all 50 states as well as Puerto Rico. The bank I work at, though, is pretty darn unique, and it's the reason why I joined the bank, and I'm helping build it. What we're doing here is we're trying to make our system basically the best system for you guys to reach out to us. Here's my slogan. One application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? Well, the bank that I work at, we're all helping add in new banks, lenders, credit unions. Why? We all came from the banking or broker field. And what we want to do is help you for every person that calls us. So when you're calling us, I want to have options. We have a massive amount of options. That's why we have our slogan. So when you're reaching out to us, we have all of our programs and all the programs and also the rates of up to 33 other lenders. Here's some of the programs that they're offering. One, if you're looking to buy a house, please get a down payment assistance loan if you need one that you don't have to pay back. Because a lot of people are getting stuck when they go to refinance. You have a $10,000, $15,000, $20,000 down payment assistance loan that you have to pay off if you refinance. I don't know if you know that, but you have to. So that's another $15,000, $20,000 you have to add on top of your loan when you're refinancing. One, do you have the equity in your house? And two, is the $20,000 or up to maybe $20,000 that you add into that loan refinance, is it going to really save you money? Yeah, it'll save you money on the interest rate, but when you add that to your equation, your payment's going to go up. So this is probably the best program to get into if you're looking to buy a house. Now, if you're looking to refinance and you're sitting there scratching your head saying, Dan, I don't know when to do this. Well, do me a favor. Pull out your mortgage statement and just go into this refinance tab right through here and plug in your information. But let me know what rate you would want to refinance. So just choose a rate, maybe 1.5% lower than you have now. What will happen is I'll get an alert. I monitor all these personally. We don't sell the data. I just monitor these personally. I'll reach out to you when the rate hits exactly where you want it to be. I'm going to call you, email you, text you, send you a video. We're going to break down what your new payment's going to be, what the monthly savings would be, what your costs are, and what your break-even point is. If it's good for you, kudos. We'll get the paperwork started and we'll get everything moving forward. If not, we'll just put you back on the list and lower that rate and wait, and hopefully rates will come down a little bit more so you can take advantage of things. So that's our report for this morning, folks. The market's really doing nothing. We got the MBS market flat as a pancake. We got the equity markets also flat. I think they're just waiting for what is going to happen next week with this, tariffs, and all the other mess that we're facing. So folks, join me today at 1 o'clock Central Time. I'll be live. I'll cover what happened this week, all the major events. Then we're going to go over and look at next week's calendar and see what data is coming down the pike that might be affecting these and the whys behind it. So thanks for watching, folks. If you would, have a fantastic afternoon. Make sure you're safe out there. Please be safe. People are crazy. And I can't wait to see you back here at 1 o'clock Central for a live event where you can ask me all the questions that you have, and we're going to answer what happened this week and what to look for next week. Thanks for watching, folks. See you in a bit. Bye-bye.